Continuing.
Well, of course, we love getting all the questions and comments here at the Real Estate Talk Show. And something that we get a lot of, and we welcome
year after year after year,
is asking about the market conditions, right?
Yeah.
Not only where we were, where we are, but what we're
Where's
expecting.
it going?
Where's
Should
it going?
I buy?
Yeah.
Should I sell?
So we have the expert here, of course. We have George Carras, and he is the president of RealNet Canada. So, of course, we'll have him explain what that's all about and why he is the perfect person to help tell us what's going on. So, George, welcome to the program.
Thank you. It's great to have you here.
So let's talk about RealNet. Tell our listeners what is the company? What do you do?
So RealNet is an information source for property markets across Canada. We track both the commercial real estate markets and also the new home markets. And our research is used across the board as official source. We're proud to power organizations like Build and the Toronto Real Estate Board and various stakeholders.
Reporting agencies, yeah. And of course, we rely on you heavily here at the Real Estate Talk Show as well. Yeah, so, and one thing I think we all agree on, gentlemen, is that numbers don't lie, right? So at the end of the day, we're going to look at some of these numbers, analyze them, and we'll get your take on them. So why don't we do a little summary in terms of what has happened so far in 2014?
Well, if we look at the new home market, June results for the new home market were very, very strong. They're up about 90%. From last June, and then you put June into context with the entire year to date, the first half of 2014, and that's been up about 50% from 2013. So you're seeing the momentum and a strong increase in sales activity of new homes in the GTA.
All right. So why are new home sales an important precursor? Like, why is that a number that we should find relevant? Well,
new homes are really important because they do a few things. They respond to the demand of population growth. Like, we're in a point in time, and housing in particular. You can take the shop out of shopping, you can take the place out of workplace, but people need to live somewhere. So the creation of new homes shows that we're fulfilling housing demand. Okay. The other important part of new homes is because people have to go to work to build them, they're a very important part of the local economy, a major driver for employment and for economic growth within the region. So I think keeping your eye on the new home numbers is very important across all parts of the GTA.
Don't you love, Simon, having somebody else here say exactly what we say all the time? It's just just really
and
is
I get
wonderful.
to rest for a while too. Yeah.
You get to take a little break.
Yeah, but George is absolutely correct. I mean, building industry land development reports, a couple 100,000 people in the industry, billions of dollars coming back into the economy. And what a lot of people fail to realize is, the federal government and the provincial governments and the municipalities have a stake in making sure that they help support the real estate economy and the real estate industry as a whole, because it's all interconnected. And we also talk about the secondary market that comes out of every time somebody buys a home, resale or new, they're on average spending $30,000-$40,000 in movers and home inspectors and legal fees and commissions, and they're going to Home Depot and they're buying furniture and all of that stuff, and it all comes back into the economy and it all keeps the train moving along.
So that brings me to my next question, and we get a lot of listener questions asking about interest rates. So if we've got a improving market, resales, of course, have certainly improved 90% for June, 50% from the beginning of the year, which is pretty substantial. Mm-hmm. All of a sudden, this improvement, does this mean that rates are automatically going to go up? What are your thoughts?
Well, I think with respect to new homes, interest rates are an interesting thing to think about because, particularly for new condos, because the interest rate environment that exists today isn't necessarily the interest rate environment that's going to exist when
they close.
When
say 4 or 5 years from now.
So you need, and that's why I think particularly the condo market is an increasingly sophisticated market. So you need more guidance. You need professional assistance to make that decision. And interest rates are one important part of that. And certainly interest rates respond to global events
as well.
And who knows what's out there for that. But I think you're looking at interest rate environments in a more classic sense for ground-oriented, housing and a more sophisticated way when you're thinking about closing on a condo.
So take us into the third quarter and fourth quarter of this year, as well as your prediction for 2015.
I think what we'll see is probably a strong response to well-priced, well-located supply. And so far in the first half of the year on the high-rise side, we've seen that back to the downtown, just east of core. That's where a lot of the momentum and the supply, well-priced supply, has been met with a lot of strong demand. So I think you'll see some of that continue in the high-rise side. I think there's a challenge in supply on the low-rise side. I think we saw a healthy amount of that, albeit very expensive relative to historic norms. And that, I think, is important to look into 2015, is the gap in price between one form of housing and another will likely grow.
So will continue to grow.
Yeah, I think we have an environment locked in place around policy and around intensification, which is going to see that price gap, which it constantly grows. And it doesn't grow because the high-rise number is dropping. It's widening because the ground-oriented, the detached home price in the GTA
increasing.
Is constantly,
Yeah.
it's a broken record of saying it's a new record. And I think that's the real thing to keep in mind as you look into 2015 and, quite frankly, beyond 2015 is that condition.
You know what, though? I have another take on it, and that is this. When you compare, people say, well, houses are priced out of people's budgets. Well, a detached home, a brand new detached home, above the 407 is now $1 million plus. And they're saying, well, yeah, but that compared to a $500,000 condo, but you're comparing 1,000 square feet to 3,000 square feet.
That's right.
So when you break it down to actual space, there really isn't that much of a discrepancy. It becomes a choice. Because you can buy $1 million condo downtown and you're still only getting 1,500 square feet downtown, or 2,000 square feet downtown, or whatever you're finding. It becomes a choice. Are you going to be living in the city in a smaller space so you don't have to commute, which is what I did for almost 20 years, or are you going to go to the outskirts to get the white picket fence and the neighbor next door?
But I think George brought up a great point, though, and that is it is something that it's not going to be that we've talked about this. This is something now that is happening and will continue to happen, and that does therefore add a bit of a challenge for those first-time home buyers, or what we call the move-ups, which they're ready to buy that next, more spacious residence. And of course, that becomes a little more challenging in terms of the price points. Mm-hmm. I mean, it is expensive.
Yeah, I think those are the moves that are available. We've talked about it before. Like you've got move up into high-rise living. You've got move out, and that move out isn't just to the 905 anymore, but it's probably into the greater Golden Horseshoe. It's considering places like Guelph and Kitchener and so on. And then, of course, there's the move-in condition where you move back in with parents whose home is likely going to continue to appreciate over time because of that condition brought on through intensification. So
now, while we're talking about parents, I think this is a great segue. We were talking before we came on air, of course, about lots of people have incredible equity in their homes, and there's great wealth there. But guess what? We get so many questions, George, they don't know what to do with it.
It's a good problem to have, but the problem is one that says your home price is likely to rise in value. And you need to figure out, depending on where you are in the age spectrum and in your life choice spectrum, what do I do with that? But that's a good problem to have.
It's a great problem to have. And Simon, this is something that you're addressing every day.
Well, yeah. I mean, on one hand, if you have, you're an empty nester, you've got a home that's mortgage free, market's going up, it's going up 5-10% a year, you're doing okay. But there's a magic word called leverage, because if you can borrow your money at 3.5% from the bank, take out a little bit of the equity of the home and invest it in almost any decent income property in the city. With leverage, you're getting returns of 25-30%. Or people say, I can borrow at 3.5 and make 25. Well, that's a no-brainer. We're seeing that increasingly happen, and it's a fantastic opportunity, fantastic option for people.
All right, George. So before we wrap up, of course, are you bullish or bearish in terms of the real estate market?
Let's say I'm realistic about it. I think what you'll find in the conditions we've got for housing in Toronto, you do have all the fundamentals which make you be happy that you're here. It's a growing region. You have a condition which is making the price of detached homes increase in value. We have an interest rate environment which seems to be somewhat steady at the moment. So I think in the grand scheme of things, Toronto looks pretty good.
All right. So let's also remind our listeners, of course, because you do stats across Canada. And for our listeners that are up in cottage country and surrounding Ontario, we want to make sure that they have access. So how do they find out more?
The best thing to do, quite frankly, is for them to contact their realtor. We power and supply the Toronto Real Estate Board and all of its members with full comprehensive information. So the easiest way, you can, of course, look at realnet.ca, but I'd say contact your realtor and they'll help you.
And we didn't pay you to say that.
Not at all.
George, thanks again for coming on the program.
Pleasure. Thanks for having me.
Great having you as always.
Thank you.